We were discussing about financial statements of a limited company. Can you tell me how many forms of business organization do we actually have?
5.
Five. What are those five forms of business organizations?
Sole trader, partnership, manufacturer, limited companies, and clubs and societies.
What is the what are the books of accounts that you make for a sole trader?
You'll make income statement and balance statement of financial position.
What are the books of accounts that you make for a partnership firm?
Income statement, profit and loss appropriation account, and statement of financial position.
Okay. There is one thing in the partnership that comes in the income statement but does not comes in partner's capital account. What is that?
Interest on loan.
Interest on loan. It does not come in the appropriation account. I'm so sorry. Okay. So whatever profit you get in the income statement, it is called which profit?
Residual profit.
What,
No,
what
profit before appropriation.
profit before appropriation? This profit you take it forward in which account?
The profit and loss appropriation account.
Then what do you do?
You add the interest on capital, and
Add
you
interest on
add interest on drawing and minus interest on capital, and like whatever other things are there, like salary or commission, you get the residual profit. You divide it
Residual
by the
profit is also called what?
net divisible value.
Net divisible? Net
Yeah, so
divisible profit.
profit. Yeah,
Then it is shared among the partners in what ratio?
half if nothing is given, or else if there's a ratio, you do it in that.
In the manufacturing account, what are the financial statements that you prepare?
Sorry, miss.
In the manufacturing account, what are the financial statements that you prepare?
Manufacturing account, income statement, and statement of financial position.
And you don't prepare manufacturing account?
You do, I said that first.
Manufacturing account is prepared to find out what?
The cost of production.
Income statement is prepared to find out.
The profit for the year.
And the statement of financial position is normal. Okay, in
Yeah,
a limited company, what do you prepare?
income statement, the SOC, and the statement of financial position.
What is there in the statement of changes in equity?
In the statement of changes of equity, there is the share capital, general reserve, retained earnings. So you have the opening
So
first,
actually, basically, they are showing the distribution of profit among the shareholders.
yeah.
The statement of changes in equity shows you the shareholders' funds.
Yeah.
Yeah.
Yes, ma'am.
Okay, fine. Can you give me the income statement format of a limited company?
So in the income statement, there is revenue minus cost of sales, which will give you the gross profit. Then you will minus the operating expenses, which include the administrative costs, expenses, and the selling and distribution expenses, which will give you the operating profit.
What
From
minus what will give you operating profit?
gross profit minus administrative cost minus selling and distribution will give you operating profit.
Then
Then you minus the financial cost, which is all the interest and percentages. Then you'll get
and
the
one
profit,
more thing comes in the finance cost. What is it?
interest, and whatever dividend pay percentage and everything
Which
is that.
dividend?
Share preference share
Only
dividend.
the preference dividend, okay?
Yeah.
Preference dividend, it comes in the income statement, but it does not come in the statement of changes in equity. You should
Yeah.
always remember the preference dividend comes in the income statement, but it never comes in the statement of changes in equity.
Yeah.
Okay. So
Then
operating profit minus finance costs
hmm,
will give you
the profit before tax.
minus
The tax, and you'll get profit for the year.
what comes under finance cost?
The interest and the preference dividend percentage.
Okay. What is a statement of changes in equity?
It
What does a
shows
statement of changes in equity show?
how the profit is divided by the shareholders.
Okay, so basically a statement of changes in equity, it shows you what is the money that belongs to your shareholders. Okay,
Yep.
your statement of changes in equity shows you the money that belongs to the shareholders, and everything that belongs to the shareholders is divided into two parts. The first part is the capital. Capital always belongs to the shareholders, which is called as the equity.
Hmm.
Yes.
Yeah.
And the second part that belongs to the shareholders are the reserves. They are the reserves or the retained earnings. In the retained earnings, you basically put all the profits that you have earned during the year. And the reserves, you have your general reserves.
Yeah.
What is the meaning of reserves?
It's where the money is held.
So basically, whenever you are earning profits, some part of the profits you take home, right?
Yeah.
In the form of dividend. And some part of the profits you keep in the business. Why do you keep this profit in the business? For further expansion.
Yeah.
So the profits that you keep in the business, it belongs to whom?
To the shareholders. No,
It
to the
belongs
business.
to the shareholders, but it is kept where?
In the business itself.
Okay, so reserves are basically the profits that you have earned. And after earning this profit, the shareholders should take it back to their home. But they don't take it back to their home. They keep it inside the business. It belongs to the shareholders, but it is kept inside the business. So that is the part of your reserves or your retained earnings. Okay?
Okay.
Okay, then there is one question in your statement of changes in equity. You record dividend on what basis?
On if you've received it on a paid basis.
No, it is recorded on the paid basis. So whatever dividend you pay, you record it over there. The dividend that you propose is never recorded in the statement of changes in equity. Okay, so if
Yeah.
we talk about the interim dividend, in the statement of changes in equity, you record interim dividend of which year?
Or the current year.
And you record the proposed of the final dividend of which year?
Paid basis.
So of which year will you record?
Current year only.
Okay, now understand. You have two types of dividend. Okay, how many types of dividend do you have?
Two types of dividend.
First is interim dividend, second is final dividend. What is interim?
It's paid during the year.
It is paid during the year, but what is it?
It is the dividend that was proposed and paid during the same year.
It is
only.
declared in the middle of the year because the shareholders are very restless and they want something out of the profits immediately. So in
Okay.
the middle of the year, when you declare the dividend and you pay it during that year, out of the profits of the current year, that dividend is called interim dividend. So
Okay.
interim dividend is something that you declare in the current year, pay in the current year, out of the profits of the current year, it is interim dividend.
Okay.
What is proposed dividend? So
The
what
amount that
happens?
is not
Yeah,
paid.
tell.
It is the amount that is the dividend that is not paid, but it is set to be paid. Like we're
Now
going to
listen,
give.
if I am in the year 2022, my year ends in December. So at the end of December, I will know my exact profit figures. Right?
Yeah.
Okay. If I know my exact profit figures, what am I supposed to do out of these profits? I am supposed to declare a dividend out of these profits. Right?
Yeah.
I will declare the dividend in 2022 that out of the 2022 profits, I am going to pay you this amount. But I cannot declare and pay in the same date because it is a long process. So when I declare in 2022, I propose that out of the profits of 2022, I am giving 5% or 6% dividend. So I declare in 2022 and I will give it in 2023.
Yeah,
So I propose the dividend last year, but I pay the dividend next year.
yeah,
This is final dividend. So in the statement of changes in equity of 2023, you will record which dividend?
you will record the declared dividend, right?
Declared dividend of which year?
Of the previous year.
Yeah. So in the statement of changes in equity of 2023, you will record the proposed dividend or the final dividend of which year?
Of the previous year.
So in the statement of changes in equity of 2023, I will record propose a final dividend of last year, right?
Yeah,
And interim dividend of which year?
of the current year.
Okay. So statement of changes in equity records a dividend on which basis?
Miss, can you repeat the question?
Statement of changes in equity will record dividend on what basis?
On paid basis.
They will record dividend on paid basis. So I would say if I have to record interim dividend, I will record interim dividend of which year?
Interim dividend of the current year.
And final dividend of which year?
The previous year.
The final dividend of the last year. Okay.
Yeah.
So statement of changes in equity, what are the columns that comes in your statement of changes in equity?
Share capital, general reserve, retained earnings, and total.
Share capital, general reserves, retained earnings, and total. So you will first have the opening balances from the
Yeah.
last year. You will first have the opening balances from in your statement of changes in equity. The very first thing that you will write is your opening balance, right? Okay. You will write whatever is there in the respective columns. Yeah.
Yep. Yeah.
Then issue of shares. Where will you record?
In the share capital.
And
Total.
okay. Then if you're transferring some money to the general reserves, from where to where will you transfer?
Minus it from retained earnings and then add it to general reserve.
And nothing in the total.
Yep.
Then the dividend that you're paying.
You add it to the, you'll minus it from the retained earnings.
And
You'll be negative in the total column.
okay. Interim dividend of which year?
Interim of the current year and final of the previous year.
Profit for the year.
Added to retained earnings
And
total.
then you will do all your totals.
Yeah.
Okay. Come on. Now tell me what do you understand by the term limited liability?
Limited liability company is where the shareholders have a separate legal identity from the business itself. There is limited liability and yeah, I think that's it.
And when I say it is limited liability means what?
Which I think it means that the business is not responsible for any debt, so no personal assets will go if
Business
the
is not responsible or shareholder is not responsible.
shareholders are not responsible.
So shareholders can lose up till what amount?
The amount that they've invested
In the
business.
okay, in the shares. So when I say there is limited liability, it means that my shareholders can only lose their value of shares. They are personally not responsible for the debts of the business. Can you give me the two types of limited companies?
Public limited company and private limited company.
What is the
public
difference between the two?
public limited company can sell its shares to the public. Private limited company can only sell it to family members, friends, or yeah, that's it, or business associates. Then private limited company can one sec. Yeah, company must end with PLT, which is private limited company, and um what else? The
LTD or
authorized share
limited?
capital.
Private limited company will end with limited or LTD.
Okay.
Okay. And public limited company will end with PLC.
PLC.
Okay. What else? For a public limited company, the authorized share capital must be greater than 50,000. But for a private limited company, the authorized share capital will be less than 50,000.